Something big is happening with SNX right now, and most people aren't even paying attention. In just a few weeks, this token has exploded more than 170% in a month, and it's not slowing down. There's a major trading competition coming with $1 million prize pool. Whales are quietly loading up, and the project is making serious moves back to Ethereum's mainnet. But the question is this the start of a long-term breakout, or just another short-lived pump? Let's dig into what could really affect SNX's future price. Well, before we dive into the future, let's look at what's happening right now. The live data shows SNX has had an incredible run recently. We're talking about a 62% increase in just the past 7 days, and a whopping 179% over the last 30 days. That's not a small move. That's the kind of surge that turns heads in the crypto space. Whenever a coin performs like that, you have to ask, what's driving this momentum? One of the biggest short-term catalysts is the mainnet trading competition that's kicking off on October 20th, with a massive $1 million prize pool. And here's the interesting part: in order to participate, traders actually have to stake SNX. That means more tokens being locked up and less circulating in the market, which can easily push demand higher. On top of that, trading volumes and open interest have been rising sharply ahead of the event, signaling that both retail and institutional investors are paying attention. It's a bullish setup, but since this is a short-term event, the real question will be, can Synthetix maintain that momentum once the competition ends? Now, let's move to a medium-term driver that could shape SNX's price beyond the competition: the launch of Synthetix's perpetual DEX on Ethereum mainnet. This is huge. Remember, Synthetix originally gained traction for its synthetic assets on Ethereum before expanding to Layer 2 solutions like Optimism and Base. Now, it's circling back to Ethereum, but with some serious upgrades: gasless trading, multi-collateral support, and a more seamless user experience. This token swap and potential governance integration could open the door to new products and a broader financial ecosystem under Synthetix. That means more use cases, more revenue streams, and ultimately more demand for SNX. It's not just a marketing stunt. It's a way to build user engagement and attract new liquidity providers to the ecosystem. In conclusion, several factors could influence where SNX goes from here. The mainnet trading competition on October 20th could drive short-term hype and demand. The Ethereum mainnet DEX launch could be a strong medium-term growth engine. The Derive integration could expand Synthetix's product offering and long-term utility. The technical overbought conditions might cause a short-term pullback. And broader market sentiment, whale behavior, and regulatory positioning will continue shaping its overall trend. Right now, SNX is in a strong uptrend, but as with all major rallies, some correction is always possible. The key is whether these upcoming catalysts can sustain interest and keep users engaged after the initial hype fades. I think this is all that can affect SNX coin. Now let's move to the full details of Synthetix coin. Built on Ethereum, the home of DeFi, Synthetix is a decentralized synthetic assets platform that mints synthetic assets using an over-collateralization mechanism. Synthetic assets, or Synths, are on-chain versions of derivatives from traditional finance. With synthetic assets, investors can profit from the value of an underlying asset without actually holding the asset. Synthetix is a DeFi protocol that issues Synths as ERC20 tokens on the blockchain. Assets supported by the DeFi protocol include fiat currencies, commodities like gold, and cryptocurrencies, all represented by their token name and an S prefix. The platform also has provisions for a different type of synth called inverse synths, created to track the opposite of the underlying asset. In summary, a user who holds the inverse BTC sync, IBTC, stands to make a profit if the price of BTC falls. Synthetix aims to increase access to assets not existing on the blockchain. Alongside fiat currencies and commodities, Synthetix also allows synths to be created for index funds so that traders can benefit from an asset group instead of a single underlying asset. Synthetix also allows its users to trade synths on its decentralized exchange, DEX, Kwenta. Synthetix originally began as a platform named Haven. In 2017, Haven was founded by Kane Warwick as a collateral-backed stablecoin issuer. However, the team behind the project decided to go in a different direction. Thus, in 2018, the company was renamed Synthetix to better represent the protocol's ability to support synthetic assets other than the premier USD stablecoin. After this decision, The company raised $30 million in funding through its ICO and sale of the protocol's native token, SNX. Since then, the protocol has evolved into one of the standard names in the DeFi community. The Synthetix architecture is incredibly technical as it features various smart contracts and other complicated mechanisms. Nevertheless, integral to the Synthetix architecture is decentralized price oracles. All price feeds on the Synthetix platform are supplied by independent node operators on Chainlink, the decentralized oracle network. Thus, the value of each underlying asset for a synthetic asset is supplied and updated by the oracles to ensure accuracy. Instead of relying on actual reserves, as is the case with stablecoins, each synth merely relies on the price of an asset. Smart contracts within the Synthetix infrastructure make it so that owning an SUSD represents exposure to the price of USD and not ownership of USD itself. Because Synthetix is built on the Ethereum blockchain, all synths are ERC20 tokens and compatible with other decentralized exchanges such as Uniswap.